11, 12, 13. Welcome to the 13 Market Moves Crypto Star course. You guys have been asking us about a crypto course for the last couple of years, and we've listened and we've put all the things that we thought were going to be incredibly important for anybody that specifically focuses on trading Bitcoin. Guys, there's a ton of charts in this course. There's a ton of insane information that can help you take your trading skills to an entirely new level. Some of you guys, after watching this course and implementing all the information that is here for you, will become trading machines. So if you're ready to become an absolute trading machine, let's dive into this without any further ado. But with just one mention that all the chart patterns, all the things that we're about to reveal to you apply to trading everything else out there. So if you're an options trader, a stock trader, a commodity trader, a lot of these entries and exits that we describe on the charts will be highly applicable to pretty much anything else that you trade. However, most of the charts that are going to be shown to you are specifically Bitcoin charts. They are going to be pointed to specific patterns that are highly applicable to trading Bitcoin, guys. So get ready to rock. Here it is. The number one thing I want you to understand is sometimes less is more. And here's what I mean by that. Try to really take all the information in this course and implement it down to a point. Don't try to invent shit. Don't try to add extra stuff. Okay, just really focus. Okay, because if you focus on everything that's here, you will be an absolute trading machine. And less is more when it comes to trading from the standpoint of your entries, from the standpoint of how many trades you take. Okay, let me break this down. The less trades you will take, the more money you will make. I know it sounds crazy because as a day trader, especially if you're new, you're like, oh man, let me go trade. Oh, everything's flashing red, green, let me go trade. I want to put this trade. I want to be in this trade. Oh my God, this trade looks even better. Let me get into that trade. Guys, trading does not work like that. You have to be 100%, actually, forget it. You got to be 120% disciplined when it comes to your entries and exits, and it's very difficult to do. So sometimes understanding that that's what's required, okay, is not going to get you to actually implement it. So I encourage you to actually go and study this course multiple times to make sure that this information, specifically about entries and exits, is ingrained somewhere deep inside in your subconscious. So you're actually functioning as a machine without the emotions. That's the only way, guys, to trade fearlessly. So less is more. The less entries you take, the better you're going to be off, because you cannot go out there and trade every day and nail every entry perfectly. However, you can do it if you focus on just a few entries and exits. And guys, focus on the charts. If there's anything you can learn from 13 Market Moves, it's not about what anybody thinks in the world about where something is going. It's about the charts. I mean, look at what they're talking about in the news today. All right, Mark Cuban goes out there and he's like, oh my God, I lost my ass on crypto. Well, why didn't he take the 13 Market Moves course and our charts diverge this course? He could have saved himself billions of dollars. But yet, even a guy that understands the fundamentals of stocks and businesses, he gets killed. Why? Because he is so, mesmerized with all the things that he knows, he forgets to neglect simple charts. Okay, as a trader, focus on the charts and you're going to be much better off. Warren Buffett, shit, he doesn't get every investment right. I mean, there seems to be, overall, he gets more right than wrong. That's why he's made billions of dollars. But when it comes to short-term trading, I mean, we don't have to go very far to know that Warren Buffett lost a bunch of money on airline stocks during COVID, and he sold them at the lows while the charts were pointing to the fact that he should have been buying at that very moment. So he lost billions of dollars on airline stocks and sold them at the lows. So again, Warren Buffett functions on fundamentals. He doesn't necessarily look at the type of charts, or he doesn't look at them in the way that we teach you here with 13 market moves and what you're about to discover with this course, guys. So pay attention to the charts. If you are a trader, you should invest 90% of your time studying and looking at the charts, and we're going to give you a recipe on what to focus on. So besides doing that, guys, don't listen to what they're talking about in the news. Don't listen to other people's opinions. Learn how to develop your own opinion about the market. The same people that were telling you to buy Bitcoin at 60,000, okay, this is the same people, okay, now that are telling you to sell it at 40,000. These people, they don't know. They don't have a clue. And what you want to ideally develop is the skill to be able to put all the emotions, all other people's opinions, all the news, and all the bullshit, and all the noise that's going out there. You want to put that aside. So get ready. If you want to develop that skill, pay very close attention to what I'm going to show you here in the next few slides. So the focus, guys, you have to be laser focused, okay? Number one, you have to understand your trade structure. You have to understand the timing of your trades, and clearly, you got to know when the hell to leave the party. You don't want to be the last one to be leaving the party. You've got to know and understand when and how to exit. So these three things, this what you should be focusing on 99% of your time, guys. Trade structure, timing your entries, timing your exits. Now, for those of you that have been following me and have taken some of our courses that are highly applicable to trading options, the beautiful part about trading Bitcoin is you don't have to worry like with options about decay or expiration. And so from that standpoint, trading Bitcoin is easier. However, there's some other limitations. And if I was to stress one most important thing about trading Bitcoin, guys, is this. 99% of the time, you have to focus on your entry. If you nail your entry, your trade is going to make you money. If you mess up your entry, you're going to be screwed. Straight up. You will lose if you get your entry wrong with Bitcoin. If you're trading short term. So you should spend most of your time looking at charts, understanding your trade structure, and the very most important point is getting your entry right. Getting your entry right guarantees that you will be successful. Now, you can mess up your exit. Hey, maybe you're not going to collect as much profit as you should, okay, but you wouldn't be even at the point to where you're collecting profit if you messed up your entry. So there's such things as liquidation price when we're trading Bitcoin contracts. You've got to keep that in check, and understanding how to calculate your liquidation price when we'll get to that later in the course, okay, is super, super important, because if you understand that and you understand your entries and levels, guys, the sky is the limit. So with that said, let's talk about the trade structure. What the heck is the trade structure? So first, you have to understand your strategy. You have to understand the strategy of your trade, and it's actually very easy. I'm going to break it down to you in just a moment. Number two is your time frame. How long are you going to be staying in the trade? Number three, you have to understand your levels. Four, you have to laser focus on the candle formation if you absolutely want to nail your entries and exits. Number five, you have to give a serious consideration to the patterns that are developing on multiple time frame charts. Number six, we're going to glance at specific indicators that are pertaining to BTC trading that are highly effective. Okay, so every stock or commodity or currency, it has a certain behavior, and we have identified certain behavior within BTC that is a characteristic of Bitcoin. And we have identified specifically one indicator which nobody's talking about, which is highly useful when trading BTC. And the great part about it, it is incredibly easy to use it. A 5-year-old can look at this and say, oh my God, I see it. A big move is coming next. So you're about to learn that. Number 7, as you can see, it doesn't say here entry. And number 8, it doesn't say exit. Specifically, we have outlined that it's entry 1, entry 2, and entry 3. And you're going to understand what all that means, but basically you're not going to get into an entry all at once. You're also not going to exit all at once. In order to be able to do it, guys, you have to shift your mind and train it to do so. And number 9, we're going to give you a ton of examples, case studies, so you would know exactly what to do when you're looking at a Bitcoin chart. Now, before we get started, here's a couple of things that you will need. Okay, number 1, the best trading platform that our group is using is on Bybit. Here's your link. Okay, make sure you register through this link right here, partnerbybit.com. /B/Let's Rock. Okay, guys, by signing up here, you'll get tremendous advantages. There's some crazy BTC bonuses we're giving away as a group. There's definite commission discounts. And guys, if you're signed up with something like Coinbase, oh shit, you're getting raped on your commissions there. So when you take a look, we've analyzed a ton of trading platforms. This is the one we're using for a number of reasons. It is highly convenient from the standpoint of execution. I'm going to talk a little bit later in the video about the platform, showing you how to use it. But understand that there is a reason why we're using it, and make sure if you got an account somewhere else that you sign up right here, right now. Pause the video, go set it up. It actually takes 3 minutes, literally 3 minutes to set it up. They don't have crazy process like Coinbase where it takes sometimes a week to get signed up. You can get signed up right here for this link in 3 minutes. Now, if you're in the United States, there is a bit of a limitation. You've got to use a VPN outside of US to sign up because of some regulations. But it's easy, guys. You go Google static or dedicated VPN, get it, sign up, guys. Don't waste any time. Let's get this done now. Number 2, stock charts, guys. I know a lot of people are using TradingView. However, there's a reason why we are not using TradingView. Crazy stuff that we have observed with stock charts, such as black candles, that you cannot find with any other software. And so make sure that when you go and sign up with stock charts, you would go to stockcharts.com. You put in our email right here when you're registering your account. And that way, guys, you'll be linked to our group. You'll be tied up to all the information that you would need for trading there. Stock charts doesn't pay any commissions. They don't do anything as far as their referral program, but it would be useful as we're trying to build a stronger relationship with stock charts with our group, that you utilize the email right here to get registered for a stock charts account. Now, you will need a pro account. It's $39. Guys, if you're a trader, you've got to get that account, bottom line, whether you trade stocks or options. So let's roll stock charts. Number 3, guys, if you have already taken Charts Diversity and Pattern Recognition course, that's great. If you haven't, I would strongly encourage you to take it, because it's going to make the information in this course so much easier for you to process and understand it, probably on a much deeper level as we're going, especially for a bunch of charts. So this is what you'll need, guys. Get it done. Let's move on. So strategy. Let's talk about the strategy. So we're talking overall about the trade structure. The trade structure starts with your strategy. Okay, and there's many strategies out there. So don't try to twist your brain. It's very simple. All these strategies, they can be boiled down just to 2 strategies. It's either you're buying the dip or you're shorting the bounce. It's that simple. Don't make shit complicated. Buy the dip or short the bounce. When you wake up tomorrow morning and the market opens, what are you going to do? Are you buying the dip or are you shorting the bounce? You've got to know that before the market opens. And so what is the criteria for that? Well, here's an easy drawing. If the market is in the uptrend, clearly you buy the dip. If the market is in the downtrend, you short the bounce. Now, where it gets a little bit complicated, if you're a brand new trader, it may be difficult for you to identify, well, what's a real uptrend and what's a downtrend? And looking at multiple time frame charts is something that's going to allow you to really understand, well, what's currently happening. If I'm trading for the next 72 hours in the market, am I better off buying the dips Are we possibly going through a situation that we call a TRO, a trend reversal opportunity? Is the market about to reverse and go in the opposite direction, guys? We're going to show you exactly. By the end of this course, you will know which strategy to use when you're looking for multiple time frame charts, because you're going to know what to look for. The patterns, the crosses, the candles, all of that is going to become more apparent to you as you look through all these charts in this course. So the strategy should be determined based off a trend. Now, you could be in a super bullish trend overall in the market, but it doesn't mean the market is not going to make some wild moves lower. Because overall, I mean, if you date to the very beginning of the stock market, I mean, overall, things just keep going higher and higher and higher. But it doesn't mean that they have not crashed by as much as 80%. It doesn't mean that we're not occasionally, periodically, every few months, it doesn't mean that we're not getting 5, 10, sometimes 20, 30% pullbacks, or what would be identified as a short-term crash. So overall, however, if you just focus on the general trend for the last month, for the last few months, you're going to be able to understand the overall where things are going. And so it's very important to I'll probably show you a couple of examples here so you get a clear understanding. What we've got here is a chart of Bitcoin. Now, this is May 28th, 2021. And so clearly, if you look at this chart, we're under the orange line, we're under the blue line, and you can clearly see every time Bitcoin gets to a blue line, yeah, it may pick slightly over it, what we call is a small overshoot, all right? And then what happens? Every time it bounces, it drops. It bounces, it drops. It bounces, it drops, or what we refer to overall in our 13 market moves, curriculum as a move 3. So you understand by looking at this chart, okay, hold on. We are trending under both key moving averages here. Every time we touch a key level, which is the blue line, we drop. In this case, at some point, we do get a small bounce higher, but as soon as we get to the second key line, we're reverse out of that. So the pattern is pretty clear. You short every bounce, right? So overall, this would be a match to this sort of development with BTC, where the downtrend is already clear. And here we're trading between 39,000 and 34,000. So it's a pretty solid downtrend, and we're looking at time frame here, or about 3 days on a 15-minute chart. So it's a 15-minute time frame. Each candle represents 15 minutes. And so within 72 hours, this gives you a pretty solid downtrend. And what you want to focus in this particular situation, and the reason you would know that there is a overall bigger downtrend, because you'd be looking at daily chart and weekly chart, which clearly identifies that Bitcoin is dropping from 61 to 58 to under 50 to under 40. And so this movement lower, not without bounces in Bitcoin, basically is what the main behavior is in the market. So when you identify a strong behavior in a longer time frame chart, what you want to focus is on the shorter time frame to see if indeed the short-term time frame chart is confirming that downtrend. And you can look, this is a beautiful setup for going in and shorting every bounce on this chart, guys, and making a solid profit. So basically, when you see this, and you already know we're all things in a downtrend, you want to focus on a simple strategy of shorting the bounces. Now, when to buy the dip and when not to buy the dip, guys. Okay, so here's a strategy of where you would want to be buying the dip. And this is a chart of Bitcoin while it was climbing from 20,000 to 58,000. Now notice this part right here, all the way up to this point and this point on the chart, it's a pretty solid uptrend. And so when something is uptrend, and notice that the price action is in this chart is above the orange line, and in most instances it's above the blue line. And notice, just like we've had in our bearish formation on the previous chart, in this case it's the opposite. Every time it dips under the blue line, they buy it. So entirely, it's the exact opposite of this chart that I was just showing you. Let me bring you back so you have a clear understanding. So see, the price action here is under the blue line, and it always shoots to the upside, and then it drops, it bounces, it drops. And this is exactly the opposite of that, where every time it undershoots under the blue line, right, it bounces out of that higher. So two exact opposites. So this would be the equivalent of an uptrend, and when the dominant behavior in whatever you trade, in this particular case BTC, is such that every time it dips under the blue, they keep buying it, and overall it's uptrending, moving higher, while conditions are met, it's above the orange line, it's above the blue line, guys. You want to focus on buying the dip. So again, you don't want to be buying the dip in conditions when you have a chart like this, when we're in a solid downtrend, when things are just picking above the blue line and then dropping. So this is not the dip that you want to buy, right? Because it's going to go, it's going to bounce a little bit. It doesn't even give you a chance to make a ton of money, and then it drops. And so by that time, you could be having a loss. So in a downtrend, you focus on shorting the bounces. In the uptrend, your strategy is buying the dips. It's buying the dips in the uptrend. So where traders make the mistakes is they neglect the fact that whatever they're trading has already shifted from an uptrend to a downtrend. And it's easy to do it with Bitcoin, right? I mean, we're going from, 6,000 all the way to 20,000. We're going from 20,000 all the way to 60,000. So it's really easy to maintain your bullish stance. But what does that do? That doesn't do anything for you. You have to understand when the trend is shifting. And I'm going to show you how to identify some of the trend shifts. As a matter of fact, without going far on this chart, guys, you have a pretty solid indication that the trend is shifting. Okay, we just went from 20K to 58K. At this point, you have a multi-top formation forming right here. Well, what happens? So the price action is moving higher, but what happens to the RSI? Right. So the RSI was highest right here. Bitcoin moves higher, RSI actually drops. It moves even higher, RSI drops even more. And at this point, it's clear that the RSI is running out of juice, which the requirement for this thing to keep bumping higher and higher is for RSI to increase, not decrease. And so this is a divergence between the RSI and price action. So starting to pay some close attention when something is up, exponentially over a short amount of time, which in this case would be 4 months, going from 20K to 60K roughly. When something is up 300% within a very short time frame like this, it's time to start paying attention to some of the clues, some of the divergences that begin developing in the chart. So up until this point, right, from 20 to this point right here, it's a solid uptrend. But at this point, when you see this first divergence on the RSI, it's time to start to begin thinking carefully, because at that point you could get some decent side drops, such as in this case we went from 59 or 60K all the way down to 47 in a very short amount of time. And you could have caught that divergence right here, and you could have had a nice profitable trade and then bought the dip again, because this dip right here was highly consistent with this dip right here. You could have shorted this candle, which we're going to talk about in a little bit, and then you could have bought the dip again one more time right here. So understand that there's time to buy the dip and there's time to short the bounce, and it all has to do with where you are on the chart. If you're above the orange and above the blue and things are moving higher, you are in an uptrend, so buy the dips until you get to a point where something has moved up exponentially higher within a short amount of time. The definition for a short amount of time, anywhere from 14 days to 6 months. If something is up 300%, it's time to begin to observe some of the divergences, such as the RSI divergence. And if you want to learn all 6 cases of divergences that can make you highly profitable, guys, make sure you take the charts and divergence course, where we've got an entire hour and a half devoted to these divergences. So make sure you do that if you want to understand all the divergences. Now, moving on, what do you see here? We're already now that on May 29th, Bitcoin is in a solid downtrend. So when something is in a solid downtrend, when it makes crazy spikes like this higher, it represents an opportunity. Why? Because it's a bounce within the downtrend. Now, this is a 15-minute chart. So you may say, okay, but we're bouncing above the blue and the orange line here, right? But if you look at the 30-minute chart, if you look at the 1-hour chart and the 4-hour charts and the daily chart, the downward trend is intact. So you've got to be able to decipher, and we're going to take a look at multiple time frame charts to help you guys understand how to read this. But when overall Bitcoin is in a downtrend, even though on your 10-minute or 5-minute or 15-minute chart, there are going to be occasions where you're going to be above the blue and above the orange line, okay? You definitely want to short this bounce. So this right here, based off the candle formation, based off the spike, if you are really trying to master how to trade Bitcoin, guys, you want to enter when Bitcoin does this wild moves. And what's a wild move? Well, the definition for a wild move in Bitcoin can change depending on the behavior. Recently, a wild move would be considered about 2,000-3,000 points within minutes, within 15 minutes, okay, within 30 minutes, 2,000-3,000 point move, just like you see right here. All right, we went from 33.5, we went from 35 to 37, roughly, a 2,000, slightly over 2,000 point move that happens in 30 minutes. That would be a definition of a wild move. So it's not just the size of the move, but measure it in terms of the time frame. So is it a wild move for Bitcoin to move 2,000-3,000 points within 3 days? No. Is it a wild move to do it within 15 to 30 minutes? Yes. So when it does that, that often will coincide with a perfect entry. As soon as you identify this type of candle formation, which we're going to spend a lot of time talking about shortly. So strategy, again, same chart. So this was your first entry, okay? When it bounced, this is your another entry. When it bounces again, this is your next entry, and this is your next entry. Guys, you could have done this, identifying this pattern. Again, once it pops, all it is just an overshoot in a solid downtrend. You want to short it. Most of the people will get scared as hell to short it because they're looking at the screen. And especially, you know, if you're looking at like TradingView type chart, all you see is these green candles. They're just piling up, and it psychologically damages you to take a highly profitable trade. Because at that point, when you look at your TradingView, you're like, oh my God, it's going to the moon. Oh, well, yeah, they were right in the news. You start doubting yourself. But what you really got to do at that point, you've got to focus on the chart and understand that when you see this is the time to short. Again, the condition is overall we're in a downtrend. So when stuff bounces in a downtrend, what you want to do is you want to do exactly the opposite of what you hear in the news, okay? You want to block all that noise. You want to focus on the chart because that's the only way how you're going to get a perfect entry right here on the bounce short in Bitcoin. And within minutes, depending on what kind of leverage you're using, guys. On this move right here, utilizing 1/3 of the BTC, you could have made about 20-30 grand right here. Utilizing 1/3 of a BTC, guys, depending on the leverage that you're applying. So understanding these bounces on Bitcoin and really just sitting there and just waiting until this sort of behavior could happen. And when it happens, guys, it's beautiful because once you nail this a few times, you will not want to take any other kind of trade. You're just going to want to be extra disciplined and sit and wait because once you get one good entry like this, you know, because these profits, they build up so quick. All right, you're gonna be like, hey, I don't want to do nothing else. Let me just wait till it does this again, and I'm gonna short the hell out of it. Okay, so be ready. Be ready to condition yourself to identify moments like this where Bitcoin is just bouncing out like crazy. It could coincide maybe with some crazy Elon Musk tweet. Who cares? All right, but short them bounces in a downtrend. So here's the #1 mistake I want you to be aware of. And that is the fact that new traders, especially if you're brand new meaning you just started yesterday or you started a month ago, a couple of months, you've been trading last couple of years, you're still considered brand new as a trader. And what you are tempted to do is you feel like you're just going to be a ninja of trading. You're just going to go out there and you're just going to be, oh man, I'm going to catch the bounce, I'm going to catch the drop, I'm going to do this, I'm going to, I'm going to go in and out, I'm going to take all these trades, I'm just going to, man, it doesn't work that way, okay? You've got to focus on one strategy. You cannot be buying the dips and shorting the bounces and, throughout the day. I mean, it's not, guys, if you're trying to scalp, stop. Just stop the bullshit now, all right? I can tell you if you're scalping, I can guess the size of your account within a couple of $100, all right? Because you're not making any real fucking money, and that's why you need to pay very close attention to what I'm telling you about in this course. So stop scalping, because you're going to just wear yourself out. It's going to be a psychological mind fuck, and you're not going to make any real money if you're a scalper. Period. Ever. All right? Now, if you got some computer program that does that for you and it works and you're happy with making, 1%, I mean, that's fine. But this course is for those guys that are trying to hit some home runs, and I'm going to give you the recipe how to do it. And a part of the recipe is do not utilize both strategies at the same time. There's going to be a point in time when these reversals are going to be so obvious that you will be able to understand the trend reversal within, let's say, a 72-hour time frame, and that's when you want to pull the trigger. But going in every 5 minutes, trying to think that you're going to catch the top and you're going to catch the bottom within, an hour or 2 hour time frame of a day, forget about it. It's not going to work. It may work once or twice, but it's going to be very, very difficult for you to stay consistent. So focus on one strategy. Just decide either you're shorting the bounces or you're buying the dips. I gave you the criteria of how to identify it. First, identify where your blue lines and orange lines, if you're in an uptrend or downtrend, identify that first and then begin to trade that day with one strategy. So again, you can't be bullish and bearish at the same fucking time, or you're going to wear yourself out, and you can't be changing your mind about the markets every 5 minutes or every minute. I mean, some guys think that trading is about, oh, let me get on this trade. Oh man, I'm making $150 in 2 minutes. I'm so fucking great. And, they get out of the trade. They're so happy with $150. I mean, they miss out on the chance to make $15,000 in the next 48 hours. So you want to identify your strategy. You don't want to be a bull and a bear at the same time. It's not going to work long term. You've got to lock your vision on the market based on what the charts are telling you, not based on what you hear in the news. And you can't just be changing your mind every 5 minutes just because maybe you're bearish and you get a few green candles back to back. And I'm going to show you how to manage this green candle situation later in the course. But the next thing that is incredibly important to talk about is the time frame. I often ask traders a question on some of these coaching calls, and that is, well, why did you get in the trade? How long were you planning on being in the trade? And 90% of the traders, they can't even answer that question. So before you put on the next trade, one of the most critical things that you should do that is a part of your trade structure, you have to understand how long are you going to be in the trade. We've talked about not scalping and not getting into these 1-2 minute type trades or 5 minute or even 15-minute trades, because that's going to make you very little bit of money. So what time frame should you consider? If you're trying to go for some of these home runs, you should consider staying in the trade anywhere from a few hours to a few days. Once you identify that short-term trend, you should be staying in the trade anywhere from a few hours to a few days. Anywhere from 3-4 hours up to 3-4 days. That's what's going to get you paid. That's what's going to allow you to capture the bigger move. And in order to do that, clearly there's quite of a difference between trying to catch a move, a 3 or 4 hour move, and trying to be able to catch a move that is a 3 or 4 day move. And in order to do that, you have to look at multiple time frame charts. So again, a typical mistake that a trader makes is, he's trying to cash out on a 200-point move in Bitcoin, and the trader misses out on a 2,000-point move that he could have capitalized on if he would have just stayed in the trade for another 12 hours. But instead, he's collecting peanuts. He ain't making nothing. And he's so happy he's made 150 bucks, okay? And then he's in so much agony when he sees a 2,000-point move. I can tell you, guys, that this is a very typical mistake. I mean, you cannot collect profits on a 2,000-point move if you're already out of your position on a 200-point move. It's not going to work. And the key is to understand when should you stay or when should you go, when it's time to get out. And we're going to show you exactly what to look for here shortly. So, time frame is very important. You want to focus on the bigger move. Do not chase the small gains, guys. Do not scalp. Do not chase a few hundred-point moves. Even if you're working with a smaller account, like a few $1,000s, and it may appear to you like, oh, 100 bucks is good for me because my account is small. Well, you've got to get rid of that mentality at the core. You shouldn't be focusing on how much you're making. The money will follow if you focus on the levels. And so oftentimes a trader that's just so desperate and focuses on the P&L is the trader that loses the most because he's so damn scared to lose. He can't focus on the things that really matter. So let me show you the things that really matter when it comes to time frame. So first, what you want to do is you want to go out there and you want to take a look. Daily chart. So a daily chart is going to give you, as you can see right here, a pretty good outlook over the course of multiple months. A daily chart, if you go to stock charts, you put in daily, a time frame, you will see data for about 4 months. Okay, and so clearly this is the chart of Bitcoin. I took a snapshot of it yesterday on June 19th, and it gives you an outlook, right, how Bitcoin sets a triple top formation. It's also known as a tornado pattern with 13 market moves. We're going to talk about it later in the course. And it basically lets you know, hey, we're in a severe downtrend here. So when you look at the daily chart, you're really focused on where things are heading overall. It gives you a sort of an overall idea of where you are in a downtrend on an uptrend. Well, a 5-year-old can look here and tell you, Daddy, things are dropping. Okay, they look like things are going lower, right? And that may not be necessarily the case at this point because clearly Bitcoin can bottom soon. I mean, it could bottom here in the next few days, 25, 27K. It's easy to understand that we're trading under the orange, under the blue. Overall, things are in a downtrend, not in an uptrend. And so overall, your strategy when you look at the daily chart should be, hold on. In this type of circumstance, I am better off focusing on shorting the bounces. So first, look at the daily chart. Always start with a daily chart to kind of get an idea of where things are. And the second time frame I would recommend looking at is the weekly time frame. So that even gives you a broader look. That gives you a broader look. And the main reason to look at these sort of things would be to see if the daily chart and the weekly chart, as far as your indicators, as far as your patterns, are showing you the same thing. And I'm not going to give away the pattern that's on this chart. We're going to get to it in a minute when we're going to talk about the patterns. But understanding the difference between the weekly and the daily, being able to identify if there is a great deal of the same number of bearish signals within the weekly and the daily is going to give you a good idea of whether you should still be implementing short to bounce or whether it could be time to be switching to buying the dips if you could clearly see some trend reversal opportunities there. So the next time frame I would definitely look at is the 15-minute. Actually, when you guys are trading on day-to-day basis, this is probably the time frame that you will be utilizing the most, because it's also it's going to show you before things are going to start changing substantially on the daily chart. on 4-hour chart, your hourly chart, this 15-minute chart is kind of letting you know, hey, this is what's happening today. This is what's happening now. Okay, and if you wanted to laser focus on things, you would go to a 10-minute chart. So when trading Bitcoin, guys, I wouldn't necessarily go to a 1-minute or even a 5-minute chart. I would focus on these charts right here. So the lowest chart I would even look at when it comes to Bitcoin is 10-minute chart. 10 minutes, okay? And so clearly, if you glance at the 10-minute chart, it already shows you a death cross right here. If you are going into a 15-minute chart, see this death cross is not here yet. It's a death hook, which means overall, short-term, things are looking really bearish. You already know that here you're within a bear pattern right here on weekly. You're within a bear pattern on daily. So now you've looked at 4 time frame charts and things are bearish as hell. Okay, so what you want to look at now is a 30-minute time frame. 30-minute time frame is super useful. It's super incredibly useful. I use it a lot into understanding, okay, hold on, maybe we're starting to get sort of a bullish momentum. For example, at times you'll see on a 10 and 15-minute chart, you're getting a bullish momentum. But overall, on the weekly and the daily chart, you're still in a downtrend. So going to a 30-minute chart is really going to tell you, well, this shift in the 10, 15-minute chart, how is it impacting the 30-minute chart? And sometimes you're going to be able to pick up some signals, specifically going to a 30-minute chart that are going to point to a trend reversal. So, and at times it's not going to be reacting at all to what is actually taking place on a 10 or 15-minute chart. So your 30-minute chart is sort of your decision maker. You're going to go and look at a 10 and a 15-minute. You're going to go look at a daily and weekly to get the overall trend perspective. But it's your 30-minute chart. Your 30-minute chart, as you can see, it's the 72-hour time frame. So if you can figure out a pattern on 3 days, if you're getting into a trade and you're planning on staying in it for about a day, 2-3 days, this is going to be your most useful time frame. So really spend a lot of time looking and reading the 30-minute chart. Now, the 1-hour time frame is incredibly important too. 1-hour time frame, definitely look at that. 2-hour time frame and 4-hour time frame. So guys, there's 8 charts, okay? There's 8 time frames that I look at when I trade Bitcoin. So these are the most important ones. And I'll be honest with you, this 4-hour chart is also super important. So if I was to pick 3 most important out of these, it would be the 15-minute, the 30-minute, and the 4-hour. The 15-minute, the 30-minute, and the 4-hour. Focus on these 3 and go and still look at the other 5 time frames, guys. You're going to get a better outlook on what Bitcoin is about to do, okay, than 99% of the traders out there. So, unfortunately, the common mistake is this. A trader goes out there and he thinks, well, I'm just going to trade today, so I'm just going to look at a 1-minute chart and a 5-minute chart, and that's it. Well, the problem with looking at these charts is you're going to get out of some really killer trades out there because you're so laser focused on what's happening this minute, on what's happening in this 5 minutes, that you're going to miss the big picture. And if you're missing the big picture, you will never nail the big move. So 8 time frames, guys. 8 time frames. To summarize this, you start with a daily, you move to the weekly, then you go in, you see exactly what's happening now. It's your 15-minute and your 10-minute. Then you transition to really making your decision to the 30-minute chart. Then you look at the 1-hour, the 2-hour, and the 4-hour time frames, and only after that, okay, you can decide whether you're shorting the bounces, whether you're buying the dips. And after looking at all these time frames, you can make a good decision of how long you're actually going to be staying in the trade. So you've got to look at these 8 time frames, guys. Don't even dare go out there and put on a Bitcoin trade until you understand these 8 time frames precisely. And as a day trader, swing trader, short-term trader, the number one thing you should be doing multiple times a day, you should be going and you should, like, it's not like you wake up, it's 7:30 in the morning, you're like, let me look at the charts, and you're like, okay, it looks good, and then you don't go look at the charts again, all of these 8 time frames till like 7:30 the next morning, and maybe you look at them at night. No, if you are day trading, you'd better go back and look at these charts again in an hour, in 2 hours, in 3 hours. I mean, if you are an active trader, you should be looking at all of these time frames throughout the day numerous times. Again, as a day trader, you should be spending 90% of your trading time looking at these charts, not listening to the news and other people's opinions. Learn to develop your own opinion on the market, and the only way to do it is to focus on the charts. These 8 time frames, if you focus on them, you guys are going to evolve into a much better trader out there. Okay, levels. Let's talk about the levels. There's 2 types of levels I believe anybody should understand as a trader. And number 1 is, clearly, it's the key technical chart levels. And we're going to give you a couple of examples here in a second. And the most overlooked levels in trading are the psychological tolerance levels, which are highly useful because it's being under this psychological pressure when you put in especially a big position. And for everybody, a big position could mean something different. For some guys, 10K position could be huge. For some guys, you know, a few $100,000 position is small. So whatever is that big position that is just stressing you the hell out, like you're really sitting there looking at your screen and you're just worried, and and the trade is moving against you, and everything inside of you screams, I want to get out of this trade. I'm going to show you in just a second how you can use this information to your advantage, and it's not in the way that you're probably thinking right now. So the PTL, your psychological tolerance levels, guys, they will be a great psychological indicator that you should tap into and really learn about yourself. So let's talk about the key technical levels first. So the question on this chart, guys, what do you see when you look at this chart? What do you see here? Well, some of you may say, okay, well, I've seen a death cross right here developing. I know that much from looking at all your YouTube videos, Leo. But what else do you guys see? The question should be, okay, if you were to enter in this trade right here, what levels should you be targeting, right? What levels? So since this part of the course is focusing on the levels, we're not going to talk about other things, but what levels should you be targeting? I mean, we already know that's in a bearish trend. It's a death cross. We've got a lot of bearish stuff going on. So would you be taking the trade on the bull side or the bear side? Clearly the answer is the bear side. You want to be shorting the bounces. So the question is, if you do short the bounce, where would you short it and where would you get out? All right, so understanding levels is crucial when it's going to be timing to make some of these decisions. So for simplicity purposes, right now, we're going to get into much more depth on this a little bit later here. But look, it's simple, right? When there is a level from the standpoint of price action, when something gets to a particular level, in this case, it's roughly about 40,000, and it just struggles to break above it, and it goes there again, and it goes there again, it sort of creates a level around a certain price. It's not going to be right to the point of $1 every time. It's not going to be like at, you know, 39,989, but it's going to be plus minus a few hundred points for something that trades around 40,000. That would be insanely precise. Within 1,000 points off of that level would still be considered insanely precise. We're not talking about a $10 stock here. We're talking about something that trades around 40,000. So your levels within 1,000 points plus or minus should be considered precise. They shouldn't be identical each and every time. So when it gets anywhere close to this 39, 40,000, $41,000 level, what do? You want to short that level. And clearly by the price action for the last 30 days on this chart, we see that every time it dips close to 30K, 30, 31, 30,900, right? that's where it bounces out strongly each and every time. So those should be based off this chart, not based off other things. We're just talking about simplified levels here. There's a lot of things going on this chart, but if we just focus on levels only, then it should be just an easy estimate. This is an estimate, right? That if it was to drop to a level of 31K based off the recent history, it is likely to bounce, or it's likely to slow down the drop, or once we are there, there's going to be some kind of bullish candle at the very least, right? Because this level of 31K has been protected, and last 3 times, we've bounced out so strongly out of that level. Let's see if that's going to repeat itself again. At this point, we show 100% probability that that's what's going to happen. Now, certain levels are broken at certain points in time, and it's the behavior in which we are approaching a level that you should be paying close attention to. So let me take you to the next chart. So just for simplicity purpose, understand what levels should you target. Well, you know you're in a downtrend. You should target a bounce. You should short this level right here, and you should attempt to buy this level right here at 31K in the expectation of a bounce off of that level. But you should also monitor the conditions of how we are approaching that level. And when I say how we're approaching that level, there's going to be a certain candle formation, there's going to be certain volume characteristic that you should be paying very close attention to. So let's talk about level on this chart. Okay, it's pretty obvious, okay, when you look at this chart, that there is a ceiling here, which we've pointed out 5 times right here, right? So 0.1, 0.2, 0.3, 0.4, 0.5 coincides with a level of 37.8 on a 15-minute chart. Now notice some of these are just slightly above 37.8. Some of them are just slightly under, like 3,700. So again, it's not going to be an identical number in each and every time within a couple of hundred points, okay? But it's a ceiling that the Bitcoin is unable to break out of. So this level right here of about 37.8, let's call it, it's going to be a level of resistance. And this is a level that you should acknowledge. This was a level of resistance on June 5th. This is also a highly, incredibly useful pattern when you trade Bitcoin. We're going to talk about it just in a little bit. But look what happens next. It's a swoosh. It's a straight crash. It's a collapse. So understanding when to enter this trade is insanely important, because you don't want to drive yourself crazy, right? Staying in this trade for 8 hours. Like, it literally goes sideways for 8 hours attempting to break that level. And what's going to happen is your high blood pressure is going to go through the roof, especially if you're sitting in a huge short position. Let's say you notice that spike and you started getting maybe around here, and so maybe you started accumulating your position just a bit earlier, and then you've added some more here, and then it's 1 o'clock in the morning. So do you get out? Do you keep this huge position on? What do you do? And so you stay up, and you're like, man, oh my God, it's about to break out. Oh, fuck it, I got to get out. And so you drive yourself absolutely nuts. And at some point, it's 5 in the morning, you're tired as hell, and you're like, fuck it, I'm getting out. And so you wake up, and you're like, oh my God, I can't believe this. This was a perfect trade. And so understanding levels, understanding key levels, how could you have identified that level? Well, if you go and look at a 30-minute chart, 1-hour chart, and 4-hour chart, you would have already seen that this was the level where Bitcoin has struggled earlier in the week. And you would have known that, hey, chances are, the probability is such, we're on the downtrend. This is a level where it struggled with before. I mean, this is a pretty solid situation where I should, okay, stay with the trade. But in a little bit, we're going to show you how to avoid situations where things are just going sideways for like 8 hours and you're just sitting there waiting for some stuff to happen. There is a better way to approach these type of level situations with Bitcoin. So here's a level. If you're on Thinkorswim, You can type /BTCH. So for those of you that are trading stock options and you're also trading crypto, I mean, Bybit, you set up your account there for trading crypto, but you know, I trade a lot of options, and so I run the BTC chart on my Thinkorswim, and so that's the ticker, BTC. It's funny because in the month of April, they had a ticker for Bitcoin, BTCH, the bitch, and we were making jokes about it, saying, "Hey, watch the bitch drop." So it finally does drop, but before it does, it was creating this topping formation. And so in this particular case, when we're talking about the levels, it's the formation of the top in BTC, BTCH, right here, was around the level of 58,000, 61,000. So right around here, you see how every time it gets there, it just struggles. It struggles. It struggles. And it's an easy way to see it. And at some point, it does make ultimately one overshoot, slightly above that, but that's the final one. And that's the one that ultimately you catch that. I mean, that's how you pay cash for your house within, within days. When you catch a nice top information, you catch the very top. So levels, from the standpoint, if we're to take a closer look, Bitcoin, once it got above 50K, it started going sideways. So earlier I was showing you a shorter time frame chart. Now this is a longer time frame chart, and basically you can see once it gets above 50,000, there's a very clear range here, sideways pattern where it's topping out right here closer to 60K, and every time it drops they catch it at about 53, 54K. So from the standpoint of trading, okay, you want to use this level of 58, 60K to short. From the standpoint of collecting gains, you want to use this 53, 54K to collect and then reverse the trade. So this was a really nice pattern that has worked out for quite some time, over like almost a month and a half. And so the Bitcoin top has been forming throughout all this time. And it was a beautiful and simple trade that was literally tied within this range between 53 and 59K roughly. It's a large enough move, but notice these moves, they don't happen, they don't happen within 5 minutes. They don't happen within 15 minutes. I mean, they happen within a few days. So in order for you to capture the move from 53, back to 58K, from 60 back down to 54K, you would really need to focus on this pattern, understand the levels. You would really need to stay with your trade for as long as 3 to 4 days to be able to capture this bigger move between the red level and the yellow level. So what levels should you be focusing on when trading short term? Well, let's break down an example right here. Guys, when you're trading short term, you really want to go before you decide on your entries and exits, which there's a lot of details. But as far as the levels, you want to go back and you want to look at a 30-minute chart, 4-hour chart, 15-minute chart. And you can see in this particular case, we have two instances, right, where Bitcoin dips just under 33K. And it picks itself up right back up here. And basically, in each case, it's a bounce. And it's a beautiful bounce because you can literally count the number of candles, and they almost coincide down to a T here. So you can identify these sort of patterns on occasion, and it's going to be incredibly helpful. But so your downside level is about 33. Okay, you don't want to necessarily bet on the fact that it's going to drop. You want to try, look, that drop comes so fast, if you don't have a limit order sitting there, you're not going to be able to capitalize on it. And so basically you want to set your sell order just slightly above that level to make sure that you're not missing out on a good exit over a couple hundred points, or 100 points sometimes. So you want to absolutely avoid getting into this trade you know, like in the middle of the trading range. You want to wait till it actually gets up there, or you get a symmetrical pattern like this, where basically you have 6, 7 white candles that are followed by a red candle, and there is a history when it does that. When you have multiple consecutive white candles, it follows by at least a series of 3+ red candles. So at this point, you're targeting a level. I mean, ideally would love to see it bounce all the way back to this 39 area, but it may not, because it's a series of lower highs right here on this chart. So what you really want to focus in is any sort of pattern that you want to identify here for an entry. But overall, as far as the levels, your ideal level would be starting to get in closer to this 39K. Okay, as far as the actual level, where the last few times it's gotten 1, 2, 3, 4 times, and so next time it's going to try to attempt coming up to that area. That's your ideal entry, because it gives you a high probability that after a substantial run-up already, if it was to get here, certainly it would have run out of juice and it would have failed. So understanding this is as your entry level, this is as your exit. Entry on the short side, this is your exit area, and this would be, once we drop here, clear 2 instances of where you should have been turning bullish. And I'm going to give you some more information on that, but clearly you can see there is one last red candle right here that's followed by the first white candle. Guys, this is your ultimate entry point. I'm going to give you many more examples later. As you can see right here, there's your candle, the last red candle, the first white candle. This is your entry point on the bull side. Exact match right here and right here. Last red candle followed by the first white candle. That's your magic trick right there. We're going to talk a lot more about it in a little bit. So, levels. Oftentimes I get a question, should I set stop losses? Guys, if you are an active trader, it's a suicide. Why would you set a stop loss if you're sitting in front of your computer and you're watching stuff? You should be able to click the button at any given moment and close your position at market, no questions asked. If you set stop losses, oftentimes they will get executed, and the trade, as soon as that stop loss is going to get executed, the trade is going to move in the direction that you planned. But not until you're already out of the trade. So especially if you're trading big positions, you don't want to set a stop loss close to a certain level, because you will get kicked out of a good trade. So if you're an active trader, you have to sit and watch. Now, if you have a full-time job, or you know you're catching a flight and you're going to be on a flight for a few hours, then you should set a stop loss. But if you're actively sitting and managing your position, if you're paying attention to the charts, if you're paying attention to what's going on, if you're actively trading, you should not set any stop losses. Your stop losses should be mental. Mental meaning you know exactly the point at which you would be cutting your position if the price action was to get to that point, and you would simply be closing at market. There should be no questions at that moment, because all of that is predetermined. Hey, if we're looking at an area of Bitcoin to enter short at 38, because we're estimating that, hey, it's not going to break above that level, but then we're sitting in the trade for 30 minutes, and we know that if it does break above 38.5, there's chances are it's going to be the beginning of a bullish reversal. Then we got the trade at 38.5. We don't sit there and wait till it goes to 39, 39.5, 40, 45. Okay, we got it. So you should know, hey, I'm getting in at 38, but if it breaks above 38.5, I'm out. So you have 500 points there, okay, and you should be taking action. If you see that, approaching, 38,450, I mean, you should have your finger on the button, ready to click it in the event what you have predetermined ahead of time is indeed going to take place. So you cut your loss right there. You don't let your loss run, and the only way you would know where that area is, you've got to look at the chart. So these mental losses, it's not like you know, it's not a game. You have to take it seriously. If you've gotten into a trade, you've determined how long you're going to be staying in the trade, and it's hitting your level, and you know that, hey, if it breaks that level, it can break out even higher, you've got to cut your loss. To avoid some serious mistakes, guys, do not focus on your P&L, as it will fluctuate. Hey, if you're trading a few BTC at, you know, 10x, 25x, 50x, and, you know, it moving a couple of 100 points against you, yeah, you will see your account in the red a big time, and your P&L is going to fluctuate. But you shouldn't be getting in and out of your trades based on how much your paper losses are or based on how much your paper gains are. You should focus on the levels. Hey, if it hits this level, I'm going to start selling. If it breaks above this level, I'm going to minimize my loss and I'm going to get out. So you should be focusing on your levels. You should be focusing on your mental stop losses, okay? And the only way to do that is you have to preset that, write it down if you have to. If you're new, you may really have to just write this down. And literally, this is your plan of action. If it breaks out above this level, I'm going to cut my position, or I'm going to reduce my position by, you know, 30%, 50%. I'm going to wait another 30 minutes, see how it behaves, and I'm going to either re-add to my position, I'm going to cut my position entirely. But you need to write that plan of action down before you get into any trade. So pay attention to your psychological tolerance levels. So in the same example where you have entered a short position at 38,000 of BTC, and now the trade's starting to move against you, and let's say you've got a position of 2 BTC short, and now at, you know, at 25x leverage, and now it's at 38.3, and everything inside of you is like, oh my God, look at this P&L. Oh, look at this killer loss. Oh shit, it moved only 300 points, but I'm losing this much. I'd better get out. And so your stop loss, your mental stop loss was at 38.5. That's the point where you would actually cut your trade. Now the trade has moved against you 300 points, but you're already screaming to get the fuck out because you can't handle a temporary loss on your P&L. And so you're out at 38.3 because you just can't take this shit no more. And what happens shortly after that, it goes to 38.350 and it collapses 2,000 points. And you're sitting there wondering, how? Gee, what just happened? Well, what just happened is you did not acknowledge your psychological tolerance level. And you didn't execute on your plan. Your exit, if the trade was going to go against you, was at 38.5. You got out at 38.3 because you were scared shitless. So, understanding your psychological tolerance level, okay, 38.3, what should you be doing? At 38.3 is apparently your best entry, okay? And if your mental stop loss is at 38.5, that represents a very small room for error from the standpoint, you know, if you were to add at 38.3 when you're scared shitless, okay, this is probably going to be your best add because the most you're going to lose is, you already know you're going to get out at 38.5 no matter what. So if it moves another 200 points, okay, your loss on that last add is going to be minimum. But if it only moves to 38.350 and it drops 2,000 points, what does that make that add? That makes that add to your position the best possible add. So when you were talking about levels, understand your psychological tolerance levels, because just about when everything inside of you is screaming to get out, what I want you to do is do the opposite of that and get in. That is highly unnatural. This goes against all the emotions that you're going through at that very moment, but that is likely to be, with a 99.9% accuracy, your best add, that oftentimes will be your perfect entry. And the opposite is true. When everything is green and you're so complacent and you're happy and you're high-fiving everybody and you're telling your wife you'll do the dishes and you'll take her shopping and you're going to go on that travel trip you promised her for years. And, when you're in that kind of mode, oh, shit, some things are just too good. Why am I so happy? Maybe I should lighten up my position. Maybe I should start exiting. But see, psychologically, it's when your psychological tolerance level is at its low, meaning like, I'm so happy, everything is so great, this trade is going so perfect, okay? You don't think about cutting your trade then. You only start thinking about cutting your trade when things are going against you. Maybe you were just up 20K, now you're only up 10K, all right? That things are starting to get a little uncomfortable. Now your psychological tolerance level went from like 1 to 50. And now all your gains are wiped out, and now you're losing $2,000 on the trade. Now your psychological tolerance level is at like 100. And now you're definitely going to close your position. Okay, but why didn't you close it when your PT&L level was at like a 1? When it was at the lows? When your psychological tolerance levels is at its low, when everything is going perfect, this is the time from the psychological trading standpoint to start closing your position. And you don't have to sell it all, but you have to sell some. You have to sell 10%, 30% of your position. You have to sell some of your position when your PTL is at the low. All right, next part of the course is incredibly important, guys. It's candles.